members are entitled to a member benefits package, which gives you access to a variety of important programs, products, and services. Also included with your membership is a free subscription to DAV Magazine. For more information, visit davma.org. That's davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what kinds of things do people need to look at to know whether or not they can undertake a successful retirement?
Yeah, I mean, first steps first, we talk about your income sources in retirement versus your expenses. And usually the easiest thing today is to look at what are my income sources now, how will they change, and what are my expenses now, and how are they likely to change. On the expense side, oftentimes it's not that big of a change, but I think that's the first starting point before getting into more complicated things such as my investment portfolio, my health insurance situation, or Social Security strategies.
Mike, a lot of times people are concerned about whether they have enough to live all the way through retirement, and so they might delay their retirement significantly. But it's also worth pointing out that sometimes the biggest risk is not retiring early enough, and you might miss out on some retirement years that way.
Yeah, I mean, look, we all do get worried about longevity, and there are plenty of warnings out there in the media about how Social Security or these other things might not keep pace. But man, it sure is devastating to see the opposite one, where you work your whole career, work your tail off, save all this money, and it can impact your health. It can impact all sorts of things. And to not get to enjoy that full retirement because you choose to work longer than you might have needed to is so much more frustrating.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
A very happy Jobs Friday to those who celebrate. It's Chuck, Mike, and Tucker with you, and at 8:30 this morning, we received the employment situation summary from the Bureau of Labor Statistics, colloquially known as the Jobs Report, and it showed gains of 303,000 jobs in March, and the unemployment rate dropped to 3.8%. Those are the headline numbers that everyone loves to talk about. But listen, when you tune in to listen to us,
you don't tune in for the headlines.
You're not just here for the headlines. No, you're not here. You're here for what's under the hood. You want to know what's under the hood?
I do, Chuck. Please tell me what is under the hood, not the HUD.
The HUD?
Go ahead.
I've never been to the HUD. In any case, couple things first. Prior month revisions, January up 27,000, February down 5,000. So one of the things that that some people have been talking about is, this is, starting to show some signs of weakness, is that you had a couple months where there were some downward revisions to prior months, meaningful ones. That stopped here. On a net basis, you saw 22,000 jobs added for prior months in revisions. And so you can put that one to bed and say, okay, that's not really a thing here. The other thing that people were talking about as a potential cause of concern is, remember, the jobs report is actually two different surveys. It's not one. They post it as one, but it's two different ones. One in which they survey about 120,000 households. The other they survey about 60,000 businesses. The household survey had been showing some weakness in job growth. And this month, that reversed with 498,000 jobs added, according to the household survey. That's also how the unemployment rate dropped from 3.9 to 3.8%. So, those two areas, which are really the only places that I thought you were seeing any kind of potential weakness, are off the table in this one. On top of that, again, 303,000 jobs created, 39,000 of them in the construction industry after 26,000 added each of the last 2 months, which means if you do the math, construction has now added 90,000 jobs in the last 3 months. That is freaking scorching.
That's huge. Healthcare continues to just be way behind, seemingly, as they added another 72,000 jobs in the month of March. And I don't know about you, I was meeting with a nurse actually yesterday, and the comment that she made for me was
I saw 81,000. I got 81.3 here.
I've got 72. So
I'm looking at the number. What do you have?
Establishment survey data, healthcare added 72,000 jobs in March.
Well, one of those has to be a typo because I guess this is healthcare and social assistance that maybe that's combined. It's 81.3. I don't know why they listed differently in different parts of the report. That's kind of stupid, quite honestly.
Agreed. But I guess the comment in healthcare would be if you're working her comment to me was like, yeah, I'm working 24 hours a week. I get benefits. If I'm there 5 years, I get a pension. And I work with people all the time who just say, yeah, it's October. I'm going south for the winter. And, would you like to hire me back when I come back in April? And all the hospitals are like, yes, work for us whatever days you want. We don't care. You can come for the summer. You can come for the winter. You can come for the fall. Whatever you want. Just please come work for us.
You just have to be okay with blood.
Yeah.
Which disqualifies me immediately. And, actually, I'm very okay with blood. I am.
I'm not at all.
No?
I pass out immediately.
Well, it depends how gruesome it is, I think.
Paper cut?
fine. I almost cut 2 fingers off with a hedge trimmer a few years back.
Oh, I'd be on the floor.
Right. Sounds about right.
And that one I got a little white.
Okay, anyway, moving on. Construction and healthcare seem incredibly robust in terms of hiring, and government has been doing a lot of catch-up over the last several months as well. Mainly local government is what you're seeing there. But in any case, this report continues a shifting narrative that has been for the last few months, which is there are just no real signs of economic weakness in this economy when it comes to growth of the labor market or spending or really anything
just
else.
Growth.
Yeah.
Let's be honest. If you are looking for signs of economic weakness in any data, whether government, private, whatever,
Show it to me.
the only thing that I can point to is retail sales have been garbage the last 2 months.
Okay.
On a net basis, they're down like 0.25% each month on average.
Manufacturing surveys.
Manufacturing
robust.
is cranking. Housing is cranking. Like you go down the list, all the stuff that would normally precede a recession is moving in the opposite direction.
So let's go to the...
And I'd also like to point out that we were on this ground first.
Yep.
We had it here first. We said, no, there's not a recession coming in the first half of this year. That's pure poppycock.
Poppycock was the word used, I believe. How about earnings? So we talk about average hourly. We talk about the combination of hours worked and average hourly.
Here's the danger zone.
Yeah. So average hourly earnings over the last 12 months are now up 4.1%. If you just take a look at the month of March, so average hourly earnings for all employees increased by 12 cents. That's 0.3%. We often take a look at this and say, well, yeah, but that can be a little bit weird because of the way they do the survey. So you want to look at the combination of average hourly earnings plus the average hours worked in the week, and both of those edged up.
And so what you end up with is what we call aggregate payrolls when you combine that then with job growth, which is now running 5.3% year over year. And aggregate payrolls is a fancy way of saying, hey, how much money are companies paying out to their workers in total?
Right. So this would be inclusive of how much are you giving in raises,
and how many
much
new
are you giving
employees are
in
coming
overtime, or whatever it might be, plus new employees that are coming into the workforce.
So 5.3 is a little bit roasty. It's not a lot bit roasty, but it's...
Where did we peak in the last couple of years in terms of aggregate hourly?
It's funny that you ask me that, Michael, because that's exactly where I was...
We really don't set this stuff
It's
up.
almost like we've done this before.
Yeah.
So I'm going to throw out April 2021 because that's a year-over-year comp that is just dumb, comparing it to April 2020.
Sure.
But if you strip that out, we peaked at around 11.5%.
Okay.
Inflation during that time when we were peaking was running 9%.
So this was summer of 22 we were peaking?
Yeah, so this is the concern that you have on this is, it peaked in February of 22.
Okay.
So the concern that you have on this is aggregate payrolls, I think, is a great proxy for consumer demand because it tells you how much money is being paid out in wages to households.
Yeah. So unless people have nowhere to spend that money, or they are just frightened to spend that money, then usually it doesn't get saved. It doesn't go towards credit card debt. It goes towards spending.
Correct.
Lead spending.
Correct. And so if we look at pre-pandemic numbers, and really what I want to look at is 2012 through 2019. I think that's relevant because the first couple of years after the Great Recession were rather bad. This number for aggregate payrolls averaged 4.5% during that time period. Today it's running 5.3, so it's a little hot. And the concern is not necessarily that it runs at 5.3 because honestly in 2018 you saw it running in that range as well. It was something where for 2018 aggregate payrolls averaged 5.1. So 5.3 in and of itself isn't bad. It's, hey, we're kind of seeing a bottoming around 5%. And the concern that I would have personally, and that I do have personally, is, hey, if aggregate payroll growth gets back up to 6 to 7%, if that's a proxy for household demand, then you can see, remember, because we're a consumer-based economy, consumer spending is the engine that drives us still. If that's the case, you have a path to nominal growth in the U.S. being somewhere in the ballpark of 6 to 7% as well. And if that's the case, if all you can generate is 2% real growth, then you got 4 to 5% inflation being tagged on to get you to that 7% number. So this is why when we look at where we want the economy to be, there's a balance between earnings growth, how much you can make in wages, and how that impacts the economy. Ultimately, the way that you want to grow the economy, sure, you'd love to have wages rise 3 to 4% a year, and you'd love to have prices only rise 1 to 2% a year, and that's how you get the feeling that, hey, I can spend more money and I have more money to go around, because real wages are going up then.
Yeah. You take a look at, I know you were just quoting this, but like a normalized period of time, I think we might call the late 2010s. There was enough time behind us from the Great Recession, and the aggregate weekly payroll growth was, averaging around 5% during that period of time. Sometimes it was a bit lower, sometimes it was a bit higher, but late 2010s, you were looking at mid 4s to low 5s in terms of aggregate weekly payrolls, and we did not see a whole lot of inflation during that period. We're very slightly elevated from that right now.
Let's take a quick break here. When we come back, we'll talk a little bit more about the jobs report and then the ultimate implication about it, which we've been talking about for the last few months now. Hey, what if the Fed is wrong? We'll talk about that when we come back.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Millions of Americans are preparing for retirement, and if you're one of them, making sure you have a solid plan is the key to enjoying your later years. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and I'd like to ask you 2 simple questions. Can you retire, and should you retire? Our new guide is called Preparing for an Upcoming Retirement, and in it, we'll discuss strategies that can help you answer these questions and others so that you can make the right decision for you and your family. There are many different elements to a sound retirement plan, including knowing how much income you'll need to live comfortably, when to take Social Security benefits, and understanding what financial risks might be worth taking. Get your free copy of our new guide, Preparing for an Upcoming Retirement, by calling 800-393-4001, 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all 3 and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, want to talk a little bit more jobs?
Yeah, I mean, I guess the just general conclusion here is that whether you are looking at this report that we get every month, right? It's the big jobs report. It is something that the Federal Reserve cares about. We have other reports on inflation that will be coming out later this month. But everything that we are looking at points to higher growth. And, you know, we alluded to this before, but I want to emphasize something. This report that we get is from the Bureau of Labor Statistics, which, you know, is probably aggregated by thousands of government employees that are lifelong government employees of one sort or another. But we have other ones too, right? ADP just earlier this week, a private payroll provider, gave their estimates of payrolls, which also showed same direction, big wage gains, and over nearly 200,000 jobs created according to their own surveys. The manufacturing data that we quote pretty frequently, all of that non-government data, that is all private
comes from the Institute of Supply
Management.
Yeah.
Private organization, a non-for-profit, and I think important to recognize all of that when we are talking about this economy growing, it's not relying on any one piece, right? Frequently, in fact, we will get data sources that show conflicting information, and that's when we kind of throw our hands up and say, well, government data is showing this, some private organization data is pointing in the other direction. You'll have to kind of wait and see how this plays out. Right now, I very much struggle to find any single data point, whether it's government produced or privately produced, that shows anything along the lines of deflation, job loss, or a slowing economy in the aggregate.
No, if you want the thing to point to, it's, hey, inflation's still running hotter than you'd like to see.
Yep.
And that's something that the government data does show, and that most other data shows as well, is that, hey, there's been some trouble kind of getting it down to where you want it to be.
Yeah.
But I see and I hear people say, look, are these numbers made up? Look, these numbers might not be accurate because they're surveying, 120,000 people and trying to do the best they can with it, but they're not made up.
You don't have, unless you genuinely believe that there are hundreds of thousands of government workers who are all in on it to make the Biden administration look better, which, again,
it's not really how the Bureau of Labor Statistics works.
I can't envision a scenario where you have tens of thousands of government workers all in on the big lie. But if that's your viewpoint, then yeah, there's nothing that I can do to contradict that.
So this is where we stand when it comes to hiring right now, and it does raise the question here, not just this, but also what we're seeing with a few other things. Hey, the Federal Reserve has been pretty adamant over the last 3 to 4 months, when pressed multiple times, yeah, we still think we're going to cut interest rates 3 times, 0.75% cuts this year. And there really aren't facts in evidence that warrant that, in my opinion. Number one, let's talk a little bit just about what we're seeing. I mean, we've talked about the jobs piece, but let's talk about the inflation piece here. And the inflation piece is one where, hey, you don't really have any conclusive data that, and I'm going to look at headline inflation, because even though the Fed talks about, targeting core because it can be predictive of headline, what they're really concerned about and what everyone cares about is headline. Like, you don't just walk down the street and say, hey, you know what? My food and fuel costs were up this month, but my core costs were down, and so I feel great. No, you're like, gas prices went up to $3.55 a gallon. I feel kind of crappy right now. So headline inflation, when we look at the CPI, is still running north of 3%. The core CPI is still running north of 3.5%. PCE is lower. It's both of those are below 3%, but you've got inflation running north of 3% and showing signs that it's kind of bottoming in that range. On top of that, you get this manufacturing survey from the Institute of Supply Management that is starting to show some signs of life, that manufacturing is starting to be on a little bit of an upswing after 2 years of downturn in the U.S. You've got Europe starting to show signs of life in its economy. You've got China starting to show signs of life in its economy. And what this is doing here is this is starting to put some pressure on commodity prices that are starting to tick back up a little bit. And the Bloomberg Commodity Index is now year to date up 3.66%. And since, I don't know, let's go back and look at the last month, it's up 4.72%. Well, commodities obviously are input costs to basically any good. Like, you need some kind of raw material to make them.
Generally speaking, yeah.
I believe that's how it works according to the laws of physics. And so if you look at the data that's coming in and what we're seeing in commodity prices, you kind of look at this and say, I don't really know how the Fed with a straight face can say, yeah, we're gonna cut 3 times this year. It's starting to be reflected in the data, in that June now is being priced at about a 50-50 shot that you're going to see a rate cut then. Whereas if you were to go back, a couple months, it was, we're 70-80% sure that we're getting a rate cut. So that's kind of where things are. But I think ultimately next week is now setting up to be pivotal on this because, look, we talk about how the jobs report may influence the inflation data. Let's see what the inflation data shows next week because we are heading right into CPI on Wednesday. Expectations right now are for both core and headline to come in at 0.3%, which, by the way, again, is still hotter than 2% annualized.
Well, hotter.
I've done the math. It's 3.6% annualized.
Well, we know that energy prices are going to show it, right? Like at the
gas
very
prices
least,
have been moving up.
Gas prices have been moving up, so you're not going to get disinflation from that area. And so, I get concerned about all of this. Certainly, the Wall Street Journal asks, "What if the Federal Reserve is wrong?" And I guess the first thing that comes to my mind is that, well, they face further credibility issues if they are wrong on this once more because they've been so vocal about their expectations and their plans. But I do want to talk about what else this means, right? Like I do want to get to what else it means if the Federal Reserve is wrong and the way that markets are going are a little bit more accurate in terms of where rates end up landing this year. Because, yes, there's implications for you and me, but I think other industrial implications for other areas of the economy are important too. Quick break. Wall Street Watch is coming next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
If you're thinking seriously about retirement, now is the time to build a sound plan that will help you enjoy your later years. This is Mike Armstrong from the Armstrong Advisory Group, and if you're one of the millions of Americans at or nearing retirement age, it's important to understand how to develop this plan, and our new monthly guide may help. In it, we discuss strategies to prepare for an upcoming retirement. We'll walk you through the process of putting together a retirement income strategy, exploring your healthcare options, and managing potential financial risks. There's also the crucial issue of maximizing losing your Social Security benefits. Call our office today at 800-393-4001 and get your copy of this new free guide, Preparing for an Upcoming Retirement. That number again is 800-393-4001, or you can request it from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead, and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after yesterday's volatile ride, markets today are in positive territory as Wall Street sifts through the March jobs report unveiled earlier this morning, where 303,000 jobs were added last month, stronger than estimates of 214,000. The unemployment rate also ticked lower to 3.8%. Right now, the Dow is up by over 1/3% or 142 points. S&P 500 is up over 0.5% or 30 points. And the NASDAQ is up by 0.75% or 127 points. Russell 2000 is edging 3 points higher. 10-year Treasury yield is up 4 basis points at 4.35%. And crude oil ticking higher, trading at $86.75 a barrel. Johnson & Johnson announced it would purchase cardiovascular medical device company Shockwave Medical for $13.1 billion. Shares in Johnson & Johnson are down by 0.25%, while Shockwave Medical's stock is up by 1.5%. Meanwhile, according to California state records, Apple is laying off more than 600 employees in its first major round of job cuts since the pandemic. The tech giant recently announced plans to cancel its electric car project. That stock up 0.25%. And Piper Sandler upgraded donut chain Krispy Kreme to overweight from neutral, saying the company is on the verge of a major growth move after brokering a nationwide partnership with McDonald's last week, where the financial firm deemed it a game changer. Krispy Kreme shares are up by 5%. I'm Tucker Silva, and that's Wall Street Watch.
Picked the wrong time to get out of my seat to go and
grab your pen.
Pick up that pen. I thought you had
offered
one more.
One to you.
I thought you had one more to go there, but I guess not. Let's talk about the Federal Reserve and those implications for, hey, what if the Fed is wrong about what happens this year, Mike?
Yeah, look, there's plenty of criticism mounting of the Fed. You need not only listen to this program to hear it. There's a piece in CNBC from Mohamed El-Arian. I heard somebody else on a podcast just this morning doing the same thing, saying what exactly is the data that the Fed is looking at to justify continuing their expectations for rate cuts today. We've done that. We don't need to repeat it. There are a lot of questions that I have. Perhaps they're just maintaining this to try and cement expectations for lower inflation. But again, I think that the way that they are dealing with this right now is not great and borderline irresponsible in terms of setting expectations. Implication, if we are correct that the data is heating up and that the economy is just getting going and there could be more inflation in the future, the most obvious one is that rates stay higher for longer. So what does that mean for the mortgage?
Not even just higher for longer? They could stay higher for longer.
Right. I mean, we can't get the idea. I mean, this is on nobody's bingo card right now, but that's usually the thing that surprises markets the most. Like, what if the Fed actually has to raise interest rates this year? That's not impossible.
Yeah, play out the string, and I'm not saying that this will happen or won't happen. I'm just saying that in anything you do, it always pays to think about all the possibilities. What happens if the 10-year Treasury has to go to 6%?
Right.
I'm not saying that it will, but what happens if it does?
Well, then commercial real estate's in for a real
residential
real
too.
Residential too. Yeah, both are in for a real problem if that happens. Commercial bigger than residential, especially in some of the spaces that have. Because remember, the strategy there has just been like close your eyes and delay as long as possible. Right. That's been the strategy that the banks and owners of these buildings have been employing: is make our payments, hold on to the keys, and let's just hope that interest rates come down or somehow magically people go back to the office at some point. And you can continue to do that for only so long, right? Eventually, The bank says, hey, yeah, this has been nice, but we want to get paid eventually. And you've got all this, there's been a lot of debt coming due that the banks have just been saying, okay, we'll delay the refinance of this. We'll delay the balloon payment. We'll push it out a couple of years and see what happens. That works for a while until it doesn't. And the longer rates stay as high as they are, or again, if the banks start thinking, oh boy, rates are actually going in the other direction, then they're going to call that.
Now, the other piece that you have to then think of, and again, this is just how I try to think about these different pieces here. Okay, so let's say that you end up in that situation. Well, the logical next thing that happens, and I do think this is logical at this point then, just because of where growth is overall, is after that you probably end up with some kind of recession. You probably do.
That said, we thought that you probably did after 2022 too. As well.
There was too much growth.
Yep.
Like I know that it got all eaten up by inflation, but there was just too much nominal growth, and at this point in the world, there just isn't.
Yep.
So you get this recession that happens whenever it may be. Now play out this string. 10-year goes from 6 to 3. It's not a very long recession, and it's not a very deep one. Because if you get mortgage rates in the 5s, oh boy, whole lot of people who are looking to move.
Yeah.
And so this is the way that you can think about this, is just in terms of the possibilities for where things go. Think about it right now. Let's say the Fed does end up cutting rates and markets believe them. And let's say that inflation does come. Think about the potential good side also. I'm just trying to play, kind of all these situations out just so that you can see the range of possibilities. Let's say inflation does come down to 2% by the end of the year. Fed cuts 3 times. Mortgage rates go to
inflation.
I don't know, 6?
Inflation
5.5?
Yeah.
Man, think about all the economic activity that gets unleashed then, and where inflation goes from there. It's tough for me to find a case where inflation just gets zapped completely for good. Even if it gets down to 2, if markets actually believe that it's going to stay there, it may actually be this self-fulfilling prophecy that it doesn't then, because there's so much activity that can happen with mortgage rates at 5 or 5.5%.
So you wanna risk for this market and this economy that nobody is talking about? Its rates go higher right now. If you take a look at the
bird flu,
bird flu would do it too. That was on nobody's bingo card, and I saw that. Story.
A lot of outbreaks right now.
But by the November meeting of this year, there is currently a 0.1% chance that rates are higher than where they are now. 0.1%, and by December it's off the table. It's 0. So you want to talk about a risk that nobody's pricing in? It's the idea that, oh wow, not only we're already starting to get to the point where market participants are realizing, hey, the Fed might not have justification to cut their full 3 times this year that they were planning. Nobody is pricing in the idea that they need to go higher, and I don't think it's likely, but it's not getting priced in.
Let me follow up on that. If you were pricing it, what would you price the chance that rates go higher by end of the year? Like that the Fed has to hike by end of year?
5%.
Ooh, I'd go higher.
Would you?
Yeah.
I don't
27.
Think so. Wow. Yeah, I don't see it as likely, because I think any inflation that you get is still relatively modest, all things considered. And so again, I'm thinking about it in terms of this Fed. Inflation goes up to 4.5%. I don't think they're hiking. Inflation goes up to 6%. I think they will, but I think that's how high you have to get for the Fed to justify going rates higher this year.
I think that 4.5 to 5 range is where it starts to get awfully tough for them not to hike. Because the general theory is, hey, you need to have the Fed funds rate meaningfully above inflation to bring it down.
Yep.
Fed funds is at 5.25 to 5.5 right now. If you start printing annually like 4.8, 4.9, ooh.
Again, we are far from there right now, and I do want to reiterate that. We are far from there right now. We are at, 3.6 in terms of annualized inflation, 3.5 in terms of most data points right now. But all of the data that we continue to get is about a economy that continues to heat up.
I want to talk a little bit about this interview with Mohamed El-Erian, who is he's the chief economic advisor at Allianz. He spent a bunch of time at PIMCO with Bill Gross in the early 2000s. And the more I've heard from him recently, the more I like him. I wasn't really a huge fan of him earlier in his career. I didn't think there was much there. But I'm starting to believe that I'm kind of liking where
he agrees with you at the moment, so it's nothing better.
I like him because he thinks I'm right. And I want to read this quote from him. Rather than be strategic, the Fed is overly data-dependent and has turned into a play-by-play commentator. That's not the role of the Fed. The Fed should be strategic. The Fed should provide a strategic anchor, a stabilizer. The mistake that they may make is that this time they'll end up being too tight. And the too tight piece I kind of put to the side. But El-Erian basically said, Jay,
be quiet.
Shut up.
Yeah.
Like, he said it very nicely, but he's
Yeah.
like, guys, stop talking after each data point and telling us, like, what you think and what you feel about each data point. Because
Especially when your opinion's changing from Friday to Wednesday.
it's not your job. Your job is to look at the big picture and say, this is where we're going and this is how we have to directionally move, because the instruments that you have available to you, they are blunt, broad instruments. They're not things where you can be like, well, we want to have a little bit more inflation in the California fast food sector.
It's a hammer, not a scalpel.
It's not even a hammer, Mike.
Yeah.
It's a freaking asteroid that you throw at the Earth to slow things down. Like, again, think about it this way, and I say this with all the love and respect in the world for the Fed. The tool that they have to control how hot the economy is whether or not they want to cause a recession.
Yeah.
They try not to, but ultimately it's, well, there's a recession.
Yep. Now, I'll acknowledge that their tools have gotten a lot more complicated, but a fair bit more dynamic and directed over the last few years. We can talk about whether or not these are the right tools, but backing the junk bond market and buying different types of securities, the plugs that they did during the
Silicon Valley Bank crisis?
No, I'm thinking of the period of time when overnight lending dried up. What was going on then? There was the
repo?
The repo market.
Yeah.
Right? That was something that they had never done before. And so, yes, the tools are getting a little bit more intentional and a little bit less like an asteroid being thrown at the planet Earth, but not when it comes to inflation. Right? When they deal with inflation, there's only really one tool that they utilize.
Let's take a quick break here. When we come back, we're talking oil prices right after this.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
How does your DAV membership benefit you? As a DAV member, in addition to DAV programs and services, members are entitled to a member benefits package, which gives you access to a variety of important programs, products, and services. Also included with your membership is a free subscription to DAV Magazine. For more information, visit davma.org. That's davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Millions of Americans are preparing for retirement, and if you're one of them, making sure you have a solid plan is the key to enjoying your later years. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and I'd like to ask you two simple questions. Can you retire, and should you retire? Our new guide is called Preparing for an Upcoming Retirement, and in it, we'll discuss strategies that can help you answer these questions and others so that you can make the right decision for you and your family. There are many different elements to a sound retirement plan, including knowing how much income you'll need to live comfortably, when to take Social Security benefits, and understanding what financial risks might be worth taking. Get your free copy of our new guide, Preparing for an Upcoming Retirement, by calling 800-393-4001, 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All right, let's talk a little bit about oil, Mike. Piece in the Wall Street Journal, oil is hitting its highest level in months just in time for the summer driving season.
Yay.
And this is really like it's the Tony Romo oil market because it's just kind of sitting there right now going, I don't know if we're going to make it, Jim. We've got these tight inventories worldwide. You've got all kinds of different disruptions popping up from Russian refineries that are being knocked out by Ukrainian drones. You got concerns about upheaval in the Middle East. You've got U.S. production in the Permian Basin starting to show signs of rolling over.
You've got ships that are avoiding major canals, either due to Houthi rebel attacks or drought in Panama. So I can't imagine
there's a bridge that fell over in Baltimore. I mean,
yeah, there's nothing really going great for outlook on where oil prices go. OPEC Plus has been cutting production or producing at reduced levels for I think 18 months now since their latest.
They've extended those cuts through year end.
And I mean, I could be wrong, but I can't really imagine that there can be any more help from the Strategic Petroleum Reserve. We're now looking at levels in the SPR that we haven't seen since the early 1980s. So, I mean, I guess you could empty the thing, but we're about half the level of total quantity of oil in the Strategic Petroleum Reserve that we were back during most of the 2010 decade. So I don't really see how you can potentially justify it like you did during COVID, pumping that back into the economy.
No. So I think that it's something where you've got tight inventories, tight supply, and this remains a really fragile market in terms of the potential for any kind of disruption, throwing prices even higher prior to year end.
Beneficiary planning and asset protection go hand in hand, and Cushing & Dolan, the experts in elder law and taxation, can help make your planning process smooth and easy. Simply saying you're leaving everything to your kids isn't as simple as it sounds, especially if they have problems on their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can cost you dearly in the long run. The number again is 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Mike, do you want to talk China now? Do you want to talk Apple or do you want to talk Ford?
I want to go China Shock 2.0. So the Wall Street Journal is making the argument that China is once again flooding many international markets with cheap goods. And
they're dumping.
This time they might not get away with it. And I just doubt it. So it talks about, cars and renewable energy gear and
steel,
all this stuff that they're dumping
ceramics.
Into different markets.
And when I say ceramics, I don't mean like dishware. I mean industrial grade ceramics.
So this is undoubtedly happening. We can measure it pretty easily. I think the question is, certainly in the United States, like we're not going to very likely see any Chinese-made cars in the U.S. But when you talk about each individual country that is at play here, they have massively different incentive structures. Like the United States has a big car industry. We're not going to allow cars in. South America might be perfectly on board with buying a bunch of really cheap Chinese-made cars, but touch their oil industry and you could be in big trouble. India might be a different story too, right? Like might be very willing to buy very cheap Chinese steel, but not want I don't know what big industry in India would.
Cars are big. Tata Motors.
Yeah, Tata. They're not going to take the cars. So I definitely think that countries are more conscientious of this right now. But also, there are a bunch of countries that are going to want cheap Chinese-made goods and are going to say, look, we don't have a domestic industry for this, so let's let it in.
There are also ones that may want to push back but can't because they need something from China as well. Brazil, as an example, might be sitting there saying, hey, we don't really want these cars and stuff coming in, but we need someone to sell our oil to. And
you're seeing this in Argentina already, by the way.
You're seeing a lot of stuff in Argentina.
Yeah, the new president there, who ran on a very anti-Chinese platform, basically said, "Hey, actually, we can't change any of the existing trade deals with China because it'll completely ruin our economy."
Which raises the question, not begs it. Hey, what is the path to changing this? Because if you basically throw your hands up and say we can't do anything, then I don't know.
Then it just repeats itself.
We're just going to be sitting here having the same conversation 10 years from now.
Yeah.
Argentina, to be fair, probably in the weakest negotiating position out of any country in the world. It's pretty close. The Argentinian economy is a mess right now. And just from a location standpoint, even though the Turkish economy is a mess, everyone still needs Turkey to help them with something because it's in the middle of everything. Not so with Argentina. Let's take a quick break. Hour 2 coming up in a bit. Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what are some of the things that can derail a retirement that otherwise would be going fine?
I mean, there's all sorts of items. Certainly, a pension going bust or Social Security getting reduced, people worry about. Certainly, we all worry about market volatility and the risks there or inflation. But one of the ones that I think people almost intentionally avoid is the risk of increased healthcare costs. I think we're familiar with Medicare costs and things along those lines. But the portion of Americans who will face some sort of heavy end-of-life care and the costs associated with it, it's a big chunk of Americans, and gosh, it's such a taboo issue that we hate talking about and being transparent about. And so you really have to tackle that one and be straightforward with the potential risk.
It seems to me that just doing some stress testing with some actual numbers can make a big difference in determining whether or not that can cause a problem for you.
Yeah, most certainly. But the costs of things like nursing homes or assisted living facilities are so frightening to people and almost unfathomable in terms of total cost that we just choose to stick our head in the sand sometimes. And that's not necessarily the wrong approach to things like market volatility. But when it comes to planning out your future financial success, putting your head in the sand is a losing strategy.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are 2 different ways that you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com. ThePresidingWithPayrolls.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com DaveandMikeArmstrong.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to ArmstrongAdvisory.com and let us help you secure your financial future. That's ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
A little bit after 11 here. It's Chuck, Mike, and Tucker with you. And we got markets rebounding after a down day yesterday. The Dow Jones Industrial Average is up 205 points. The S&P is up 43, and the NASDAQ up 179. So anywhere from about a half to a 1% rise in major U.S. indices. 10-year Treasury is up 6.4 basis points to 4.373. We've got oil up 42 cents a barrel to 87.01. And that's not great for drivers or people who use plastic or really anyone who is alive today. Unless you're in the oil industry, then it's good for you.
Or if you get a lot of Fraudenscheid about watching other people fill up their gas tanks when you have an EV.
Did you mean to say it that way?
How do you say it?
You said Fraudenscheid.
How do you say it?
Well, first, the first letter is the S. The F part.
Schadenfreude?
Yes.
Fraudenscheid versus Schadenfreude. No, this Fraudenscheid is something else.
Is it?
No.
I didn't think so.
Yeah, so unless you're one of those people that really gets a lot of gratification about other people pumping their tanks while you drive an EV, which I don't. I have 3 gas cars, so it doesn't really work for me. And
so the national average for gas price is up to $3.58 and 0.2 cents, continuing to rise off the $3.07 that it was at earlier in January, now up almost 20% year to date, and that doesn't feel very good. And we've got gold up $28.90 an ounce to $23.37 and 40 cents. Yet another all-time high for gold as it continues to surge, even with yields rising. So, fair question to ask, hey, what is gold telling us here?
Do you make anything of markets rallying after this jobs report we received this morning, which by any way you measure it was hotter than expected and wage growth hotter than expected? I mean, granted, all markets, I think, finished off more than 1.25% yesterday, so potentially just rebounding from that sell-off. But nothing about this report seems to indicate rates coming down.
No, but here's where I guess I land on this, is the Fed, in its last SEP, its Summary of Economic Projections, said growth is going to be stronger than we expect this year. Inflation is going to be higher than we originally expected. And we're going to maintain the same policy of cutting interest rates.
Yep.
So, all else being equal, if the Fed is saying, hey, we're not going to do anything, and there's more growth showing up, it's good for stocks. It might not be good for individuals. Let's talk about this a little bit. If I am a company, Chuck Incorporated, which I'm not, but do you think anyone's
Go on with
registered
that.
that?
Yeah, probably. Chuck. Yeah.
Probably a beef company.
Charles Schwab already has it, probably.
Probably. In any case, I'm Chuck Incorporated, and I am selling my widget for $100. I make $10 on said widget. If I can go forward and A, sell more widgets because the economy's hotter, and even if there's inflation, let's say the price of my thing, I've got to, my input cost goes up, so I got to raise my prices to maintain my margins. Now instead of making, I'm selling it for $110 now instead of $100, and I'm making $11 instead of $10. My profit just went up by 10%. And I'm selling more of these because the economy's hotter. That's good for me as a stock because my profits are going up because profits are nominal. They're not adjusted for inflation.
And if you're a large company that's been around for a while, you probably also aren't looking at refinancing your debt right now because you did so back in 2020 when rates were ultra low. So I don't need to borrow any more money at this stage. I've already locked in my rates at 3.5% for the next decade.
So if the Fed is saying, hey, inflation and growth can run hotter, yeah, for me as a company, that's fine. Now, if eventually it gets a little bit too hot and the Fed has to say, Chuck, you done it this time, like things are too hot, and then they got to raise rates, that's when, you end up seeing kind of the potential issue there. But if the message is, yeah, we're going to let this economy grow and inflate even if it's, hotter than we want it to be, that's not inherently bad for stocks. Now, for individuals, let's look at, I'm no longer Chuck Incorporated, now I'm just Chuck.
Just Chuck.
Now I'm a businessman, not a businessman. In this case, I'm making $50,000 a year.
Okay.
My costs go up by 10% because Chuck Incorporated raised prices on Chuck. Even if my employer gives me a 10% raise, I'm still just buying the same stuff with more money.
Which almost precisely in the aggregate what's happened over the last 3 years.
Which makes me feel bad because I'm like, hey, I'm making more money and I can't get ahead.
Yep.
What gives? So for Chuck the person, that scenario doesn't really feel very good. And so this is the delicate balance that the Fed is trying to strike, which is, hey, what's the right level of inflation and growth such that we can kind of, grow our way nominally out of some of these debt problems and things like that we have without angering the masses too much. And the answer, in my opinion, is, hey, look, if you can get to like 3% inflation consistently, like on average, not bottoming, but average 3% inflation and real growth is 2%, most people are cool with that because that's basically what it was in the 90s.
Yeah.
And give us some productivity gains so that things feel better and that we, our standard of living goes up. Yeah, we're cool with that. I think when you start seeing things hotter than that, it starts to be a little bit dodgy. And you start seeing numbers printing, 4% higher, 4% or higher on inflation. And it's like, oh boy, this isn't going to be good. So that's where I think we are right now. But that's why for stocks, as long as the Fed doesn't change its tune, it's fine. Not that this is where we are, but take a look at any stock market in the world where the local economy has experienced, like really rapid high inflation, and take a look at that stock market measured in its local currency, not how it's measured, overseas with exchange rate adjustments, but when there's really high inflation, stock markets go to the moon. And the reason why is because stocks are priced nominally. It's that you don't adjust a stock for inflation. Where you get hit on them is where borrowing costs go to the moon as well. But if you look at, countries that experience really, really high inflation, not like what we did, it's high, but it's still within the realm of normality. You talk about places where hey, we saw, prices double in 2 years or something like that. And look at what happens to those stock markets before central banks get a handle on it. And they go through the roof because it's just, there's all this money that's being made by companies because prices just keep going up and up. Yeah. In real terms, those markets aren't making any money. But if you look at it in, kind of their local currency just nominally, yeah, they go up.
So let's reiterate here and drive it home. We're not there yet.
Where?
To a point of ultra high or even high inflation in comparison to the last few years.
No.
The concern is that going into this year, everybody assumed that the inflation story was dead and that the story of the year to dominate was rates coming down. And I think for the first time this year, over the last month or so, that's been called into question by many market analysts and economists.
Yeah. And so this is going to be the next 2 months of data. I've said this for a while now. March and April data that we get in April and May, this is the ball game for the year. This is the ball game for the year. If the data improves and we start getting back on that, it doesn't have to be 2%, but 2.5% path. All right, we got something to work with here. Otherwise, the Fed's got some egg on its face. And I haven't said that in a while. I said for late 2021 through mid-23, the middle of last year, I was like, hey, man, the Fed's not really on the ball here. Back half of 23, I thought they did a fantastic job, quite honestly. Now I'm like, you guys, what are we doing here? We're taking victory laps in December. I don't watch a ton of car racing. I used to growing up. And then, do you guys remember when IndyCar split from kart and open wheel racing in the U.S. basically died?
No. Not something that I followed, no.
I do. And after that, I never got into F1 for whatever reason and blah, blah, blah. But here's what I know about car racing. If you're doing a 200-lap race, no matter how far ahead you are, you don't take your victory lap at lap 190. Because a lot of weird stuff can happen in car racing. Same with the economy. The economy is like a car race. And right now, Jay Powell is just like, hey, I got 10 laps left. I'm just going to coast. And inflation's coming up from the back like, hey, still here. Hey, Jay. Good to see you again. Remember me? I'm inflation. I scared you a couple of years ago.
Yeah.
That's kind of where we are right now. And I don't know if, inflation passes, Jay, to continue with the awful metaphor that I'm stretching now. But this is what keeps me up at night in terms of the potential problems right now. It's not recession. Recession may come later. It's not now.
Yep.
Let's take a quick break. When we come back, we got trivia right after this.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Millions of Americans are preparing for retirement, and if you're one of them, making sure you have a solid plan is the key to enjoying your later years. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and I'd like to ask you two simple questions. Can you retire, and should you retire? Our new guide is called Preparing for an Upcoming Retirement, and in it, we'll discuss strategies that can help you answer these questions and others so that you can make the right decision for you and your family. There are many different elements to a sound retirement plan, including knowing how much income you'll need to live comfortably, when to take Social Security benefits and understanding what financial risks might be worth taking. Get your free copy of our new guide, Preparing for an Upcoming Retirement, by calling 800-393-4001, 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right? You can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return. Number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Time for trivia here in the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only. Well, we all have our preferred grocery store we all like to shop at, right? Well, some grocery store chains have been in our neighborhoods for decades, but you may not realize how old some of these grocery store chains are. The oldest grocery chain has been in existence since 1883 and currently has over 2,700 stores across the country. Trivia question today: what is the oldest grocery store chain in the U.S.? Once again, what is the oldest grocery store chain in the U.S.? Be the fifth person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card in the next segment. 617-362-1385. And the fifth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
An exclusive story breaking down from Reuters that Tesla, who has been indicating that they are trying to build an entry-level car priced probably somewhere in the $25,000 range. Remember that their current Model 3 is, if you look at the pricing, and I'm just pulling up kind of where it is without any incentives or anything like that. Current Model 3 base at the moment is priced at, come on, where are you? No, give me the purchase price. $38,990 is where it currently stands. So
not exactly a mainstream discount car. I think
I think it's something.
It's not
that,
an F-Series truck, but it's
within like the target range for the mass affluent family that's making $100,000 to $150,000 a year, but not the family that is below there, obviously. And the idea was, hey, we want to build a car for the masses that's cheaper. I'm going to quote here from Reuters. Tesla has canceled the long-promised inexpensive car that investors have been counting on to drive its growth into a mass-market automaker, according to three sources familiar with the matter and company messages seen by Reuters. The automaker will continue developing self-driving robo-taxis on the same small vehicle platform, the source says. Okay, so this is something that I don't really know how to say, so I'm just going to say it. I don't know what the path is for future growth for Tesla then. You can't continue to grow at 30, 40, 50% a year selling vehicles that are priced the way they are. Like the Cybertruck.
You already did it. They've been sold.
Right.
That customer has been sold to.
Correct. And they might come back and buy another one later, but that's, 10 years down the road or whatever it is. So if you're trying to figure out, the path here for them, they are a growth company that is no longer growing. And they need to prove that is not just a one-time thing for this quarter. Otherwise, the stock price has the potential to get fairly ugly fairly quickly.
I saw elsewhere, Electrek reported yesterday that the inventory that they just had to put out there on their Model Ys was in the tens of thousands, and you're seeing discounts as much as $7,500 per vehicle on some new vehicles, let alone the used car market for the Model Y is their SUV version of their electric vehicle, and across the board you seem to be seeing price cuts to incentivize sales, and then to your point, killing a business unit that was supposed to be the future growth engine.
And the piece on this that matters, so their operating margins as of the trailing 12 months in December of 22 was 17%. By the end of Q4, it was down to 9%. Those margins are going to keep coming down. You start having profitability questions probably by the end of this year if this continues. I mean, that's where they are. They're not there yet, but you probably start having profitability questions within the next 12 to, maybe not by year end, 12 to 18 months, you probably have them.
Again, this isn't to say that it's a car company that can't make money. That's not, I think, what anybody's saying, although they struggle to do so.
No, I'm saying that if this continues, that might be what they are.
The bigger point that I would make is very recently their stock was being priced as more valuable than, was it every other car company in the world combined?
Yes. Self-driving robotaxis, we've been hearing about this for almost a decade. Elon originally said they were going to be out by 2018. It's 2024 now, and we're still talking about this. I mean, like, we're kind of starting to run up against it. Again, they're not going out of business anytime soon. Let's not jump to anything crazy. But if you're having to put 15 to 20% discounts on your inventory to sell them, and your previous profit margins were 9%, that means you will be selling those vehicles at a loss, which is not something that you can do and still be profitable. That's how math works. So that's kind of what I'm looking at, which is, hey, you better get your cost structure down. Otherwise, you are going to have some profitability questions. They do have $30 billion in cash and short-term investments, according to their latest filing. So, again, this is not a going out of business thing, at least not in the short term. But it very much is, hey, the whole premise of Tesla was it's different from every other car company. It's starting to look a lot more like other car companies.
Yeah.
Which, again, you can run a fine business that way. But you probably can't be a $500 billion stock anymore.
Yeah, raises a lot of questions about the future. Again, I think more of the stock price than of the company and the vehicles, because I have a tough time believing I won't be able to find a Tesla car 5-10 years from now. But again, for a company that makes cars to be priced more valuably than every other car company combined, seemed a little weird in the moment.
Taking a look at markets as we head towards, by the way, Tesla on this news here, now down 5.25% today. Until this, they were basically trading flat. So this news has moved the stock by about 5% or $25 billion in market cap in the last 20 minutes. So it's not just me saying this is bad for Tesla. This is the market saying, hey, this could be bad for Tesla. Let's take a quick break here.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Preparing for an Upcoming Retirement. Mike, what kinds of things do people need to look at to know whether or not they can undertake a successful retirement?
Yeah, I mean, first steps first, we talk about your income sources in retirement versus your expenses. And usually the easiest thing today is to look at what are my income sources now, how will they change, and what are my expenses now, and how are they likely to change. On the expense side, oftentimes it's not that big of a change, but I think that's the first starting point before getting into more complicated things such as my investment portfolio, my health insurance situation, or Social Security strategies.
Mike, a lot of times people are concerned about whether they have enough to live all the way through retirement, and so they might delay their retirement significantly. But it's also worth pointing out that sometimes the biggest risk is not retiring early enough, and you might miss out on some retirement years that way.
Yeah, I mean, look, we all do get worried about longevity, and there are plenty of warnings out there in the media about how Social Security or these other things might not keep pace. But man, it sure is devastating to see the opposite one, where you work your whole career, work your tail off, save all this money, and it can impact your health. It can impact all sorts of things. And to not get to enjoy that full retirement because you choose to work longer than you might have needed to is so much more frustrating.
Our guide this month is titled Preparing for an Upcoming Retirement, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
Today's trivia question was, what is the oldest grocery store chain in the country? That would be Kroger, founded in Cincinnati, Ohio in 1883 by Barney Kroger. Currently, Kroger is in a legal battle with the FTC over the company's proposed $24.6 billion merger with Albertsons. We have two winners to announce today. Winner of the Financial Exchange Show t-shirt was Mike from New Hampton, New Hampshire, and the weekly winner of the $100 gift card to Applebee's was Stella in Oxford, Connecticut. So congrats to both winners there. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
Just an interesting point on that. So Kroger may be the oldest grocery store chain, but the first supermarket, which is decidedly different than just grocery store, Piggly Wiggly.
When did that come around?
1916.
I was surprised that you said 2,700 locations for Kroger?
Yes.
Because Kroger, so the big difference between supermarket and grocery chain, grocers, most people don't. You know all the stuff that people are talking about now with theft and, we need to put things like behind the counter and behind.
Yeah.
That's what grocery stores originally were. Piggly Wiggly was the one who came in 1916 and said, no, we're not putting this all behind like the counter where the grocer goes and gets all the stuff for you. We're just going to have you walk through the whole store and pick up what you want. Piggly Wiggly.
There you have it.
What a name, right?
Yeah, pretty good. Pretty good.
If you were naming a grocer, what would you call it?
I haven't thought about it enough, Chuck. I'll get back to you.
Tucker?
Bundles. Get your bundles.
It's good. It's good. I don't have a name, but I was just curious if you had anything that you were working on. Apple laying off 614 workers after canceling their car project. Not surprising.
Yeah, these were people that were working on building an Apple car or designing or figuring out how they were going to do an Apple car, and presumably that skill set does not translate quite as well to
AI.
Home robots, I guess.
They said that they were going to repurpose these people for AI.
Yeah. So, we're covering a lot of car stories, not just today, but recently. Tesla's been in the news a lot. And the big trend that you seem to be seeing is all the excitement over self-driving cars and electric vehicles over the last 5 to 10 years.
It's dead.
If not dead, then dying, right? Like the AI is just sucking up all the oxygen in the room, and so you're not getting any hype over EVs like you were very recently, like 2021. Remember all of those SPACs that were going to make more money selling electric vehicles than anybody ever understood?
I do.
Yeah. Not many of them really talking about that much anymore.
No.
In fact, many of them going out of business.
Ford also slowing its push into the EV space. They said that they would delay production of at least 2 new EVs and pivot to making more hybrids. And I maintain that the plug-in hybrid in particular is the way that you can get the best of both worlds. It really kills like 8 birds with 1 stone without killing any birds.
Yeah.
I mean, think about what you can do. You get the EV benefits for short trips, which obviously is something that, anyone who's driven an EV, the feel of it's nice and it's a nice ride and everything.
Sure.
On top of that, you get the environmental benefits. You also get the ability to have longer overall range through the combination of the battery and gas-powered engine. You have multiple ways of filling the thing up, so depending on where you are, you can actually arbitrage and choose what's cheaper if you want to, quite honestly. And it allows you to improve the overall fuel economy of your fleet without having to push everyone towards a one-size-fits-all EV. I freaking love plug-in hybrids, man.
Yeah. Says a Tesla owner.
The other thing that you can do, by the way, is you have the ability to tweak that hybrid to whatever you need to do for the particular use. So if you have, something where you're saying, hey, I got my small car like the Prius and I really want to maximize gas mileage, great. You tailor how the hybrid works to do that. If you have, and I'm using Toyota here because they have the most of these, they also have a version, I can't remember if it's of their Tundra or Tacoma, I think it's their Tundra.
Okay.
Where they have a hybrid in it, but the electric battery is actually used in the electric motor, is used to just generate more power and torque more rapidly so that you can actually pull more and tow more easily. So you can tune it for whatever you want the particular use to be. And I think that's cool.
Folks, we have a brand new guide for the month of April of this year, all about preparing for an upcoming retirement. If you or someone you know is facing this down and might be looking in the next 5 years at pulling the trigger here and getting ready to move on from their career, there's a lot of preparation that goes into it. I think first and foremost, we always talk about the budget and how to plan, and there's all sorts of rules out there, like I'm going to need 80% of my income compared to when I was working. Those are all great rules of thumb, but don't tell you anything about yourself. There are a number of key steps that we suggest people take a look at when it comes to evaluating their readiness for retirement, and this guide points to all of them. What are going to be your income sources? Have you thought about a pension or your Social Security in terms of how that's going to impact your overall plans? What's your Social Security declaring strategy? What if you have a government pension, and how will that interact with your Social Security? And then certainly important to talk about when markets are near all-time highs is my portfolio actually set up for a coming retirement, given that it's going to be probably the first time in your life where that is going to start getting spent down instead of accumulating? If you have questions along these lines about how to prepare for your own retirement, we've got the guide for you at the Armstrong Advisory Group. It's called Preparing for an Upcoming Retirement, and you can request it two ways. One, you can go to our website, armstrongadvisory.com. There's a monthly guides button right there where you can request it online and just download it from there. Two, you can call our offices and we can email or mail you a copy of this as well. The phone number is 800-393-4001. So I'll give that to you again. One, armstrongadvisory.com, or two, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, have you ever been to the Pump Jack Cafe in Olympic Valley?
I've not, no.
It's in Lake Tahoe, and I'll quote from their own website. Pump Jack Cafe is widely regarded as Lake Tahoe's premier dining destination. It's also partly owned by Gavin Newsom, the governor of California.
Fancy that.
They posted a job listing at $16 an hour, even though California requires fast food workers to be paid $20 an hour. Now, this obviously is not a fast food restaurant, but if the governor signs a bill saying, hey, I want to raise the wages of dining workers in my state, but then the very restaurant that he is a partial owner of says, no, I'm not going to pay that wage. They're not required to. I'm not saying they're doing anything illegal. It's just very unseemly. It's kind of like, hey, $20 for thee, but not for ye.
Yeah, I mean, look, does Gavin Newsom have anything to do with operating this restaurant? Of course not. It's in a blind trust. His sister operates it. But I do believe that he's generally aware of the fact that he has an ownership interest in a restaurant that's not subject to the same minimum wage rules. And
maybe just optically pay $20 an hour?
Might be a good idea. Again, he has no right to influence any, pressure on this restaurant to do so, because that would be probably even worse. But yeah, optically, when you have set up this new board that is driving up wages for fast food workers everywhere, and then your fine dining restaurant has wages starting at $16 an hour, it's a little bit funny.
It is.
Yeah. Again, no economic impact, but man, that is That is not a great look.
Gavin Newsom's just had a tough time with restaurants the last 4 years. If you remember back in early 2020 during the throes of the pandemic, he was spotted at the French Laundry which is like one of the most upscale restaurants in the country, I think. When he was basically saying, don't go out to dinner.
Yeah.
So it's been a tough few years for Gavin and restaurants. Let's take a quick break here. When we come back, we're joined by Paul LaMonica from Barron's right after this.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network. The U.S. Virgin Islands is St. Croix, St. Thomas, and St. John. Visit one or all three and enjoy the vacation of a lifetime. Each island is special in its own unique way. So whether you want the heritage of St. Croix, the pristine beaches of St. Thomas, or the calm and relaxation of St. John, the U.S. Virgin Islands is one of the top vacation spots to visit in the Caribbean. You can expect perfect temperatures, a wide variety of water sports, world-class cuisine, and a vibrant nightlife. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Beneficiary planning and asset protection go hand in hand, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Millions of Americans are preparing for retirement. And if you're one of them, making sure you have a solid plan is the key to enjoying your later years. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and I'd like to ask you two simple questions. Can you retire, and should you retire? Our new guide is called Preparing for an Upcoming Retirement, and in it, we'll discuss strategies that can help you answer these questions and others so that you can make the right decision for you and your family. There are many different elements to a sound retirement plan, including knowing how much income you'll need to live comfortably, when to take Social Security benefits, and understanding what financial risks might be worth taking. Get your free copy of our new guide, Preparing for an Upcoming Retirement, by calling 800-393-4001, 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan has written a new guide that may help you avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. An example? The federal estate tax exemption has increased by nearly $1 million from 2023. That could lead to a larger inheritance for your family members. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Your Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration is now open. Help support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information and to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
We're now joined by Mr. Paul LaMonica from Barron's, here to talk a little bit about MicroStrategy. Paul, how are you today?
I'm good, thanks. How are you guys?
Doing great. So MicroStrategy up around 170% in the first quarter of the year. What do they actually do?
Yeah, that's a great question. I mean, this is a software company, but the software revenue and earnings aren't the reason that people are buying this stock. MicroStrategy, whose executive chairman is Michael Saylor, who's very active on X and other social media platforms, talking about how bullish he is on Bitcoin and crypto. MicroStrategy is a company that owns a large amount of cryptocurrency on its balance sheet. At last check, the holdings were worth around $14 to $15 billion based on where current prices are. So I think people are viewing MicroStrategy more as a Bitcoin proxy than as an enterprise software company worth owning. And that's why you have this research firm, Carousel Capital, that recently said you should just short MSTR and find other Bitcoin-related investments to go long on.
Well, I guess this is the question that I would have is there any advantage if you're looking at it just as kind of a Bitcoin proxy? Is there any advantage to owning MicroStrategy as opposed to any of the new Bitcoin ETFs or just Bitcoin on a crypto exchange?
Exactly. And that is the point that Carousel Capital is making. Why own MSTR, which is a software company that, based on traditional valuation metrics for price to earnings, price to sales, is stretched, to put it mildly. You don't need to own MSTR to get your Bitcoin exposure because, as you point out, you can open up a Coinbase account and just buy Bitcoin directly through there. You can buy one of the numerous spot Bitcoin ETFs that are now available from investing powerhouses like BlackRock, iShares, and Fidelity. So it's much simpler for a retail investor now to gain Bitcoin exposure if they're bullish on crypto and not necessarily have to do it through this back door of MicroStrategy.
Doesn't this also present, though, like, let's say that a bunch of people decide to short the stock and it goes down significantly. Don't you end up with an arbitrage opportunity just because the value of the Bitcoin may be worth more than the market cap of the stock at that point?
Yeah, we're not there yet because MicroStrategy's market cap still exceeds 15 billion or so by a pretty wide margin. But I think you're right. If enough people follow this advice and actually short MSTR, you could eventually reach a point where MicroStrategy would look like a compelling value if the market cap no longer is higher than the amount of Bitcoin that they have on their balance sheet. The one issue I think, though, that I think is very risky with what Carousel is recommending, I agree that MicroStrategy is probably overvalued. But when you look at how MicroStrategy and Bitcoin have tended to trade, it's been in tandem because of MicroStrategy's heavy exposure to Bitcoin. So it's hard to imagine a scenario where MSTR would necessarily decouple from Bitcoin and other cryptocurrencies because, again, let's be honest, no one is buying MicroStrategy because they think the software is fantastic. I mean, it's not a knock on their software. It's just that the revenue and earnings from the core business pale in comparison to the crypto exposure they have.
But what kind of software do they actually make?
Yeah, just enterprise software, so big businesses.
Okay, I always see them talked about for the Bitcoin piece, but I just I don't know anything about their software business, actually. Paul, are there any other companies that are in a similar boat where they've got an asset like this that is driving most of the value and the core business is not?
Yeah, I haven't really seen that per se. I mean, you could argue that, DJT, which we spoke about last week, is,
Sure.
Obviously a stock that trades more on the political potential rise and fall of Donald Trump in the polls and chances for him to beat Joe Biden in November. It's not necessarily trading on the fundamental strength of Truth Social and Trump Media's core business. That's obviously not, a crypto related story. But, we definitely have, I think MicroStrategy could be described in some respects as sort of a meme stock similar to DJT and GameStop and AMC of a couple of years ago.
Very good. Paul, we appreciate you joining us today, and I hope you have a fantastic weekend.
Yes, same with you guys.
That is Paul LaMonica from Barron's talking about MicroStrategy. Mike, what do you got for me?
TikTok is really trying to pull out the American heartstrings here, turning to nuns.
Pull out or pull at?
At nuns, veterans, and ranchers in their most recent marketing blitz. Pretty diverse group that they're going after here to try and defend their position here. So you've got a nun in northern New Jersey who is speaking for TikTok about a community she's created where people can feel safe asking questions about spirituality. You've got a patriotic Kenny who's a Navy veteran and a rancher who are all big TikTok fans and don't want the government. No.
This feels like a setup for a joke.
It is not. It does. A nun, a veteran, and a rancher walk into a bar. No. They are all being hired by TikTok to run ads in support of their platform because of concern that Congress is going to ban it. Which, by the way, what happened to that?
It's sitting at the Senate.
Dead.
Well, I don't know if it's dead.
Yeah, they're just not talking about it, I guess.
It's sitting there. The paper's probably right there. If you walk into the Senate, it's like, oh, there it is.
Send a follow-up.
So I'm sure that there are many diverse
Dear
groups.
Senate.
Just checking in.
Wanted to see what happened with the TikTok
No,
bill.
you've been busy lately. Let me know what you
Have
guys.
they been in recess?
Please advise.
They might have been.
In any case, I haven't heard anything on a potential TikTok ban recently. Clearly, TikTok is trying to
basically run out the clock on this.
Yeah, make sure it gets to the next administration, so hopefully somebody else has to figure it out. But yeah, I recognize that there are plenty of vested interests here, but I continue to say that I think the risks probably outweigh the benefits.
Taking a look at markets, I don't know why we just had the last 2 days. The Dow is up 371 points, the S&P is up 63, and the NASDAQ is up 230, almost reversing all of the losses from yesterday. At least on the S&P they have, the NASDAQ they have, the Dow not quite. So I don't know what we're doing here. I do. I know this is how markets work, but it's just kind of funny when, after yesterday, you get all the people saying, oh, is this the start of something big? And then today it's like, nope, not yet. Maybe soon. 10-year Treasury is also up 6 basis points to 4.37%. Hope everyone has a great weekend. Enjoy the basketball games. Remember, we got an eclipse coming on Monday as well. So wear your really, really good sunglasses, and we'll see you Monday.